Welcome, everyone, to another RLT Pivot podcast. My name is Tracy. I'm one of your hosts. I'm here with my co host, Dan Jansen. And in today's episode, we are going to be talking about order types. We're going to go over a whole bunch of information that may be helpful to you if you're a new trader. And before we get started, I just want to remind you that if you find value in what we're doing, please hit that subscribe button, hit that like button, and don't forget to hit the notification bell. Our chat's live. And we're going to start off by saying, let's see, anybody that's listening right now, please throw into the chat what your favorite or your most common order type is that you use. I'd like to know that. And if you are listening to this on the podcast, feel free to email Dan at reallifetrading.com and let him know what your favorite order type is. Love to know. All right. Dan, how's it going?
I'd just like to receive email, so that'd be super awesome. But yeah, hit me up on email. Let me know. That would be definitely dope sauce. But yeah, awesome. How are you, Tracy?
I'm good. Actually, I'm good. I'm getting ready to go away for a little bit, and yeah, it's been super busy, but I'm excited for this particular episode because there's a lot of order types that I get asked about that maybe aren't available in my broker or in Canada. So I'm curious about what you have available in your broker. But yeah, did you do any trading today?
I did a little bit of trading. So basically, most of my orders are more stop limit orders.
Okay.
So I'm looking for the stock to go higher. I don't really do market orders too much. I used to do it a lot in the beginning, but sometimes if I'm just trying to get out of a trade, maybe I'll do a market sell or something like that.
Okay, well let's start off by discussing a market order. What exactly is a market order?
So anytime you're trading a stock or option or anything like that, you'll see an ask, a bid, and an ask price. So when you're getting in at the market, it's just telling the market, "I want in. Just get me in at current price." So you're getting taken in at the current ask, which is usually the highest price point from when you hit the button. You're just getting the fill at wherever you currently stand in the market. So you're not getting an exact price that you might need if you're calculating your R's, but you're just saying like, hey, I just want to jump in and be in on this trade.
Okay, so why would you want to get in on a market order? Why would you want to use that
Yeah, so
order?
it could be helpful, especially early morning. I know a lot of scalpers; they'll do market orders as well, so they're just trying to get in and out pretty quickly. So that's gonna ensure that your order gets taken. So if you're doing like a limit or stop limit, you could either get skipped or passed or something like that. With a market, you're guaranteed to be in. It's just your price could fluctuate based on how quickly that individual stock or option might be moving.
Gotcha. Now, just so you know, because I teach my students this all the time, but a market order is an aggressive buyer or seller. That is what actually moves the market. You need market orders all the time in order to move the market. Otherwise, it just would sit still. So they
Right.
are a necessity. We do need them, and but yeah, I don't use them very often. In fact, I'd probably say maybe 0.5% of my trades are used with market orders. At least my entries are. My exits are always market orders, but my entries are, well, I shouldn't say they're not all. My exits aren't always, my stops are always markets. So my exits are typically market orders and my entries are not. So how about you? Would you say that you use it more often, more or less? You said you used a lot of stop limits. So what's the percentage of you using market orders?
I would say very rare am I using a market order to get into a trade.
Okay.
Very rare. I'm trying to think of even the last trade that I possibly have done and a reason as to why I would have.
Yeah.
For me, it's very all my trades are very calculated, so I want to make sure I'm getting in at this pretty much exact penny. And I will get skipped on trades, and as long as you're comfortable getting, I don't mind getting skipped on trades because there's always another trade. There's thousands of different stocks in the market you could choose from. You can set different orders for wherever. So if I get skipped, and it's happened before, I had was it a limit order out on Tesla, and I had the after hours checked, and everything was good to go. And after this is last week, I think it came down to 570. My order was at 697. It was 569.7,
Ouch.
569.97. Missed me by 3 pennies and then just went on a run.
Yeah.
It happens. If you're comfortable with that, you get used to it. It's not too big of a deal. But I'd much rather get skipped on a trade they just get a horrible fill, and now my risk to reward might be off, and I got to recalculate, and maybe that makes my me trying to get an R or two R's a lot more difficult because of the certain fill, and especially if you get filled and you're, let's face it, I'm not correct on every single trade I take. I've never met a trader that is, but if I get a bad fill in a trade and that one doesn't work out, then not only am I losing that R, the risk unit that I'm placing on the trade, but I'm also now losing a little bit extra from the bad fill, and then maybe also gets slippage on the way out too. So you could have, at the end of the year when you're looking at your P&L, it could vary a lot based on if you're using market orders or limit orders to get in. So they are very important.
Perfect. Now, let's go over limit orders. And I want to get back to market orders in a minute, but I want to explain limit orders and stop orders before we get back to it. So, limit orders, what exactly is a limit order for people that are new?
Yep. So it is exactly what it sounds like. It's your limit. So that's if a stock is trading at 59.23 and you're saying, I don't want to get in until 53.10. You'd actually go in, you put a limit order, you put 53.10, and then if the stock comes down to that price, you'll get filled at the certain price that you want. So your order just sits out there until the market wants to fill you at that place. And again, you do have a little bit of risk of doing that because if it never comes down, you never get filled. But if you want to catch something lower, you're gonna put in that limit order.
Absolutely. And I like to always think about it as a limit order. The object of trading is to buy as low as you possibly can, sell as high as you possibly can. So a limit order says if you're buying, I want to buy at this price or better, which means that you're going to get filled at this price or something lower because you don't want anything higher. That's the better part
Right.
because the objective is to buy as low as we possibly can. So this is your set price, this is your limit price, and you want to get in at that price or lower. And if you are looking to sell, you want to sell at the highest possible price. So it would be this is your limit sell price, and you want to be sold at that price or higher. And that's basically what a limit order is. So that's the way that I remember it. And I found it very difficult to um, to recognize when I needed to have a limit order versus a stop limit order all the time. And that's the way that I remembered that price or lower, or
Right.
that price or higher. So stops. Let's talk about stops then. What exactly is a stop?
So a stop is when you want to get out of your trade. So you could also use a stop to get into a trade as well. So it goes either way, but that's it's just depending if you're going bullish on something or bearish on something. But yeah, your stop. So if you're already in the trade and you're saying if it drops $1, the stock price drops $1, that's my risk based on how many shares. Maybe that's 500, maybe it's $1,000 that you're risking, maybe it's $100, who knows. But if it hits that certain price, you want to be out of that trade. So you want to put some kind of stop in place for that to occur.
Okay. And I'm actually going to elaborate just a little bit more because I want to make sure that people understand this. An actual stop order is not an order. It is an instruction to the market. And all it does is say, hey, market stop. So if you have a stop, the market sees the stop order. It says, oh, stop. What do you want to do? And then that's what it's saying to me. What do I want to do? And at that point, I have to have something attached to that stop. And the stop that Dan's talking about right now, where you're using it as a stop loss or a stop exit, is attached to a market order. So that stop order gets executed, the stop gets waived, the market says, hey, what do you want to do? And you say, I want to submit my market order, and that market order says, get me out of this trade. And that's how that
Right.
operates. So it's really a
It's
combo
like your
order. Yeah,
your safe word. Get me
exactly.
out. Stop.
Yeah, yeah, exactly. So remember that, because a stop can be attached to, it needs to be attached to something else. And that's where you can start to get into some really creative trading styles by attaching it to a market order or a limit order. And an example would be, well, let's talk stop limit. So why would you use a stop limit order, for instance?
Yeah. So if the stop limit order is going to take you out at that price. So if you want to get out, you want to get out at $49.12. You're going to put in $49.12 as your stop limit. So this way, if it gets down there, it could fill you at your price. The risk to doing that, why we don't do it too much, and again, most stocks I'll do the stop market because if you get skipped on your exit and it just crashes after, well, you still have your share, so you're going to go along with the ride. So the market, it might not give you the best price to get out, but it does ensure that you will get out of that trade. So You might get out at that price you put in. You might get some slippage. Slippage is when you put in 49.12 as your exit, and maybe it actually takes you out at 43.09 or whatever number. So maybe a couple cents here and there, which on the P&L aspect, it does add up and it does affect your overall P&L. But I much rather take a 3 cent or even a 10 cent jump if it's like a Tesla or something like that, than to be in the trade and just keep going down for another $10 on the trade, just being wrong and something happens in the market or whatever the case.
Yeah, absolutely. So in Canada here, we're not allowed to use stop market orders. So they don't exist. You can't put a stop loss in
Wow.
place for your trades. You have to get around it by putting in a stop limit order for an exit. So what you end up doing is putting a stop, that's your stop price that triggers the limit order. And because it's a sell, remember we said that it's a sell at this price or higher, which means you put the limit down at, you can put it at zero really, or 1 penny, put it at 1 penny, and you'll end up getting traded or sold at whatever price is between the stop order and where your limit is. The risks to that are they could potentially fill you right at your limit order if they wanted to, if they were selling order flow or something like that or whatever. They could also sell you at, or let's say that your stop, you put your stop in at say at $10 and you put your limit order at $9 and price just blows right through that nine. Once it gets below nine, it's not filling you anymore. So you're
But
stuck until it goes back up to that $9. And that's the problem on the Canadian side of anyway, which is why I trade American stocks, because I don't like to play without risk or without having a risk management on the
so
table.
if you're
So
trading Americans, just to be clear, if you're trading American stocks, you could then put stop market.
I can, yep, I can
Wow,
absolutely. It's a Canadian exchange that doesn't allow us to put the stops in, and it's
crazy Canadians.
yeah, it's extremely frustrating. But in that same token, I mean, I don't know how many short squeezes actually take place on the Canadian market because you don't really have any stops to trigger, right? They'd all have
That's
to
true.
manually
Yeah.
market it out. So, but that's cool. Now, what about stop limits to enter a trade?
So if you want to get in, let's say the price is $45 on the stock, and you say I don't want to get in till $46. So you're actually trying to buy higher. Then you're going to do a stop limit to get into your trade. So a lot of people will ask, well, why would you want to get what it's at 40 45 now? Why do you want to get in higher? Everyone says buy low, sell high. So basically, you want to be, if you want a certain breakout, so you have a lot of selling in a candle, you got some good volume, something like that. If you take the breakout, you're saying, all right, well, the bulls made up their decision on which direction, and then at that point, I want to be a part of that trade. So for that reason, you want in higher. You want to be the first one to get in as the bullish momentum starts picking up. So you'll put in a stop limit if you want to try to get in higher to a trade.
Absolutely, and the chart just looks better at that point, right? It looks better when it start to
Yeah.
make that. Yeah, absolutely. Now,
If a stock is going down and you're like, well, yeah, I kind of want to take a reversal on this, you don't want to be just jumping into the trade. That was a mistake I was making early on. I'm like, this looks good, and then it continues to drop, and you're just getting stopped out. So you don't want to get into that certain type of trade, perhaps, unless it starts moving in your direction. This way, you have a little bit higher probability on your side.
yeah, for sure. Now, have you ever used a stop market order for an entry?
Stop market for an entry. I have not. No,
You
I've
haven't?
never
Okay.
done it like that. No.
Well, it's one way if you want to make sure that you get in on that breakout, but I would only advise it on really, really, really liquid stocks. So
Yep.
where there's a low risk of slippage, the
Right.
AMDs, the Apples, that type of thing, that are highly traded, those would be the best ones. But that will guarantee that you get filled on that breakout. Or
Yep.
what about the option of doing a stop limit order, but setting your limit higher than your stop? So your stop triggers, and then you get entered into the trade within
Yep.
like a 5 cent or 10 cent. Have you ever used that?
Yeah, so I've used that before, and in terms of the what you said before, if you're using a stop market to get into a trade, that's like you said, that's you want to use the higher volume stocks, the more liquid stocks, because again, if you have a dollar spread between the bid and ask, you're going to get a horrible fill of that trade. So that's important to understand. A lot of people don't really understand why there's a bid and ask. Someone's trying to sell at the bid, and they're trying to sell at the ask, but someone else is trying to get it into the bid. So if you just do a market and you get triggered on that, you're going to get in for the ask price. And if, like I said, if it's a dollar, if it's not that much volume, not that liquidity, you're gonna get a horrible fill on that certain type of stock. Even a stop market on the way down, if you're trying to get out, usually you want those on the higher volume stocks. If it's a wide spread, I'll typically do a stop limit to get out of those type of trades too.
Yeah, and
Just
that's a
because
great.
again,
Yeah.
I want my certain fill on those.
Yeah, it's a great point. Great point. Now, my favorite order, I mean, I use limit orders and I use stop limit orders, but the OCO, okay, I use that almost exclusively with just about every trade.
Yep.
Do you want to explain that?
Yeah. So it means one cancels another, or one cancels other.
Yep.
So with that, that's you're basically putting two orders in. You're telling your broker either this happens or this happens. And I'll use it for partials. I'll use it for full exits of trades. But basically, you're saying I'm in at $45 on the stock. If it goes up to $50, you could either take 50% of your trade, or all of your shares off the table, whatever the case is. Or if it hits your stop of $42 first, then just cancel the trade. I'll take the loss. So by putting in an OCO, and I don't know about Canadian brokers if they all have that option, but I know for a fact a lot of the US brokers, there's only some that actually have that ability. So if you're looking to day trade, or even swing trade, that's a valuable thing to find out from your broker if they offer OCO. I know some of the brokers at one point they start taking them away. Those guys are typically trying to market a little bit toward the buy holders, or bag holders, depending on which direction that's going. But they don't really gear their service toward day traders or people just trying to get in for certain types of profit. So make sure you ask your broker if they have the OCO, because that's going to be a huge effect, whether that's the right broker for day trading or swing trading, or if that's more of a buy hold, put your retirement account here, whatever the case might be
Yeah, and I
for
can
that.
assure you that Questrade does offer, they call it a bracket order. It's not an OCO. It doesn't say OCO. It is an OCO, but it doesn't say OCO. It says a bracket order. So if you use the IQ Edge version, which is the desktop portion of Questrade, and I'm an active trader, so I have low fees as well. So I only pay a penny per share for my commission, up to a maximum amount. But if you right click on the ticker, it gives you an option. You can say create a new order, or you can attach a bracket. And at that point, I can attach a bracket with my stop loss and my target. And my target I can set, my stop I can set with a different amount of shares, whatever I want to do. So I can be quite creative in how I set this up. So an example would be, for swing trades, for instance. If I don't want to babysit, I can create an entirely automated trade by, let's say I have 10 partials that I want to take, each at 10%. And by the time I get the 10% out, then I'm done the trade. That's my final target. I can set up
Right.
10 individual brackets with my entry. So my entry is done. I've got a stop and a target, stop and a target, stop and a target. And with each target that gets hit, it cancels the stop out that's associated with, but I still have the rest of my position protected for the duration of my trade. And it's pretty much can just babysit itself and do its own thing. And I don't need to monitor it, other than say an alert for moving my stop up or adjusting my stop
Right.
for protection. So it can be
How,
quite useful. It's a great tool. I really like it.
once on Quest Trade, once you put your order in, how difficult is it for you to now go back and change that bracket to move stops?
It's not you hit the pencil and then you get into the modify and click it. I mean, it's time consuming because you have to go through, yes, I want to do this. Yes, I want to do this. Confirm, 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 and then submit. That the biggest problem that I have is they have, and I don't know if this is the case in the US, but in Canada, they have a limit. It's a dollar spread between your stop and your limit. So if you try to do a 50-cent bracket, you go to submit and it gets rejected, and then you're scrambling for time. So you always have to be conscious of that. It's happened to me more times than not. I submit my bracket order, and I'm waiting just to hit that button, and then all of a sudden I hit it, it gets rejected. Now I got to resubmit it, and I missed the trade. And it's just because it was an oversight on my part. I didn't think about it.
Right.
So
Yeah.
yeah.
And for so I use TD Ameritrade, which if you have that, you could get Thinkorswim. Thinkorswim. So I still set my brackets for whatever reason. I just more comfortable just setting it through TD Ameritrade just because I'm here anyway.
Mhm.
It's easy for me. But once the bracket goes up, then you could just kind of on the graph on the actual chart, you'll see where your stop is and where your targets are, and then you could always adjust those right from the chart, and that will just connect to your broker and then tell your broker like, hey, we moved the stop. So I do find Thinkorswim very easy for that as far as moving your stops once the certain brackets are set up and everything. So I like that feature a lot.
Yeah, and I miss because I used to trade with Sierra charts all the time. I used AMP futures in Sierra charts, and I loved trading with the ability to have everything moved. I could just click on the chart, and it would just
Yeah.
submit my limit order based on where I was, or if I was above the price, it would submit a stop limit order, or I could automatically. It was just a click, and then you can click and drag and drop, and it was just so simple and quick and easy.
Right.
And I really miss that, but that feature is not available with Questrade. It's really unfortunate, but yeah.
Right.
So, question for you. I'm going to give you a couple little orders here that I think are important to go over.
And
And
right before we get to that, I think we did have a question about the flatten button. Do you use the flatten button at all?
I do, but in Questrade, it really irritates me because it's not a true flatten.
Right.
It's a flatten if you don't have any other orders on. But if you have all the other orders on, you have to cancel the orders before you can hit the flatten. And that's the part that really irritates me.
Yep.
Sierra Charts doesn't. You hit flatten or you hit reverse, and it immediately reverses your position or it immediately flattens your position. And that is a really good thing to know and know how to use it because it's your panic button, it's your escape. It means kill everything, just get me out of everything, just flatten me and put me to zero, or flatten me and put me into cash. Um,
Yep.
I highly recommend that you understand where it is, how to find it, and how to use it. And each platform will use it a little bit differently. How about you? Have you used it before?
I've never had to pull the cord on that parachute,
There you
so I've been fortunate, but I do know where it is. I do know what it's about. I think that's the key. But yeah, for me, I've never really had that issue. I've always had my stops in place, and if somebody tweets something and the market just goes completely the opposite direction, I'll just take the loss, whatever the case.
Oh, Dan,
Um,
wait till you're my age. Okay.
21.
Yeah, I wish. My eyes are getting so bad. I'm making little tiny errors with my entry. I have to use that button a lot. Well, not lately, but I have had to use it a lot for that reason. I'm being extra careful, but yeah, my vision is going. So, I mean, it's from missing one digit, I'll reverse them the wrong way, and so instead of buying like
Yep.
750 shares, I'll buy 570 shares, or I miss one digit and I'll put in 57 shares. And it's like not until I look at my P&L going, well, that trade should have been 200 times what it is. What's the deal? Oh, I missed a digit.
So
Oops.
you're quick to catch the mistakes, though. I've had orders where I'm like, all right, I need 500 shares of this, and I'm in for five, and like I'm watching the trade on the screen. I'm like, yes, it's working, and then I'm looking at my P&L. I'm like, I'm up $4 on this trade. What happened? And then like,
Yeah,
yeah, so
yeah.
whatever. But yeah, you're at least quicker than me on realizing. I just put it in and
Yeah. Well,
done that before.
it's good to, when you make those mistakes, just quickly exit and set it all back up correctly. That's the best
Yep.
thing to do. So don't be afraid to do that at all. So what I want to talk about right now is an all or nothing. Have you ever heard of that type of an order? An AON.
Yep. So all or nothing means because sometimes you'll get partial fill. So let's say you do want 500 shares of something. If you click all or nothing, or before we even get to that, if the stock price comes down, you want it at $43.12, then it could come down there, but it doesn't mean that you're going to get filled, number one. And number two, it doesn't mean you're going to get your full lot size. So you might not get all your shares taken at that certain price. So when you click all or nothing, that means if you're going to give me all my shares, terrific, put me in. If not, then don't worry about it. So that's a key feature. I don't really use that one because I'd rather take a partial than I mean if I'm going to make $12 on a trade because it only took one share in, so be it. It's $12 more than I have, and I'll go eat some lunch somewhere. But yeah, so it's not something that I use, but there is some other traders I know that will use it, and because it's important, they want to get all. They might not want to have to babysit a trade that they only got 25 shares in, if they have a ability to take another trade maybe and get all their shares filled.
Well, it might also be worthwhile for people that have a lower R. as well, because if you get filled on a partial position that's already too small, you might not even cover the commissions of your trade. Um,
Yep.
so smaller R, or possibly even even if you're paying higher commissions, that might be one of the orders that you might want to consider looking at,
We
because you want
we
to
don't
cover
have
those.
yeah, in the US here we're almost commission free at this point,
Oh, there
pretty
you
much
go.
across the board. Back in the day, yes, that was a key feature because at that point, like you said, if you do get filled on something, that's charging you commission. And if it's not going to take all, then it could deviate from now you have a good trade and it doesn't really matter because you're going to lose either way on it if they take one share in or whatever the case. But yeah, right now we don't really have the commission. So again, how important is it? It just really to for me it would be more to just manage your trade and you're manage a full position minus like I got 12 shares and now I got to sit here and still watch it or just use the flatten button at that point. I guess I don't know.
There you go. Fair enough. Okay, so then tying into the same one, you probably don't use this either, but a fill or kill. Have you heard of that?
I know what that is, but yeah, I've never used it.
Yeah. Okay.
Fit-
Uh,
it's either take me in or just cancel a trade.
yeah, exactly. And it's tied to an all or nothing, but it's got a time limit on it as well.
Yep.
So, yeah, absolutely. Okay, what about good till canceled? Now, I use this all the time. So there's good till
Yep.
canceled, and then there's day. Do you want to explain those?
Yep. So if you're doing day, that means your order is only set up on a day. When you're placing your order, double check what you want to do, especially like swing trades and things like that. If you're trying to place a swing trade and you put day, I've done this before, and then like 3 days later, you're like, oh, it hit my price. What happened? It's because the order cancels at the end of that day, so it's not on the table anymore.
Yeah.
If you're doing a swing trade, or I'll use the good to cancel all the time for like pyramids and stuff like that. So I'm predetermining my levels of, let's say, the Tesla pyramid, and I'll put good to cancel on every single order. Usually that gives you about a 6 month window. So still go back in, check every once in a while your orders are still set up. But at least here in the U.S., it's not an indefinite forever order. Usually, I think it's about a six month time frame on that.
I've never even looked at how long I've always canceled them long before that ever comes up. So I don't even know
You
if
just
there's
put
a
the
limit
day
on
in.
them.
Yeah.
Yeah.
Yeah. No, well, for pyramids, you're gonna a lot of times my pyramids are wider,
Yeah.
so those I've actually had things that haven't filled in 6 months, and then I'll just go replace my same orders in. So
Gotcha.
if you're doing pyramids or swing trades, a lot of times the good to cancel you're good because if you're not in 6 months on a swing trade, it's you probably missed it. So you could kind of control that. But yeah, if you're building pyramids and you want some longer term, just I want to buy something at this certain support level, and if it comes down, great. If not, don't worry about it. But you have to just kind of go back and renew that order after a certain amount of time.
Fair enough. Fair enough. I did not know that, so that's good. I've just learned something new. Now, what about a trailing stop? Have you ever used one of those?
Trailing stops I like. So trailing stops, let's say you hit a certain target. You could set it actually by percentage. You could set it by certain dollar nominal value to the penny, whatever the case is. So typically, I won't do percentages because I can't figure out percentages. Most likely, what I'll do is I'll put in some kind of let's say it's running for $1 and it looks like it's got great momentum and still carrying on, but I don't really want to lose as it goes up. I'm already kind of pretty much at my targets. So I'll do some kind of trailing stop, maybe like a 20 cent, depending on the stock, maybe like a 20 cent limit or something like that. So every time the stock moves 1 penny, your stop automatically moves up a penny as well. And then just kind of continues on. So you're kind of catching that bullish momentum. Sometimes out of the gate in the morning, those are pretty cool. At that point, though, I just like to sell into strength for the most part.
Hmm.
Um, Also, if I'm leaving somewhere and I really have to take this order because I have a problem, and I have to make sure that I get into the market and that's what I want to do, then I can set a trailing stop. I'll go a little bit wider and then just kind of see how that works. So let's say it's $1 stop and I have to leave, but I really want to place this order. I'll do $1 trailing stop. So if it goes up, great, and then just kind of if it runs, it runs. If it doesn't, it doesn't. So just be careful on those. Those are always not like the best fills because if you go on wider stops on everything, and it is a very volatile stock, you might get stopped out below break even, and then it comes back for the retest and runs or something like that. So just know what you're doing. There's certain scenarios where it's nice, but yeah, it's if you're sitting there watching it, I don't love it as much.
Not my favorite order type, that's for sure. In
Yeah.
fact, I've never even used it. So,
Oh,
yeah,
it's kind of fun because you're like, oh, my stop's moving, and you get really excited for some reason. I don't know why, but
yeah.
yeah, I don't know. It's a little thrill.
I'm very particular where I want my stop, so I want to make sure that that
Yeah,
stays there. But I cannot believe 30 minutes is gone. It's time to say goodbye.
this is crazy. Can we extend it? Whatever. There's always next week. Thank you guys for tuning in once again to the Pivot Podcast, coming back each and every week. We got to get those thumbs up buttons clicked. We need some more likes. Make sure you hit the thumbs up, like button, hit the subscribe button. Check out reallifetrading.com for really 100% free education. Come trade with us live. I saw a couple people are in the mentor group signed up with you, Tracy. So, yeah, if you guys are looking for some kind of mentors, we have a solid team here with Real Life Trading. You guys can check that out and do full courses with some of the mentors here with Real Life Trading. Tracy, absolutely fabulous. Appreciate you joining us once again, and we'll see all you guys next week.
You guys rock. Cheers.